Okay, we have 25 connected. That's a good number to start. A lot will be covered tonight, so we don't want to take so much wait a bit longer because that would mean um we'll start skipping certain things. So we'll get started. So welcome this evening. It's really a beautiful evening and a topic that everyone is talking about in 2026, right? So in 2025, this time 2025, this was not the topic to talk about, right? So but in 2026, everyone is talking about this. Um, and it's a lot more important now for business owners and for individuals. So it's not just if you're running a business that this matters to you, matters to every single person. So we're really grateful that we have someone who understands the mystery. You know how when you go to be the doctor, you're like relieved that that the doctor will be able to explain what's going on. So we're really grateful that we have an expert tonight who will definitely interpret what's going on and then advise on the best moves that you can make in order to stay safe in order to prevent future hassles. So we're really grateful that our dear friend Motunrayo Oyelakin, she is here this evening with a wealth of knowledge to do all of this. So before then, let's begin with an opening prayer, and then I'll hand over to her. I'll let her do the introductions because I really want her to have enough time tonight to do all that she needs to do. But let's begin with a prayer tonight. Father, in the name of Jesus, we thank you. We thank you for tonight. We thank you for your grace at work in our lives. We thank you for your mercy, oh God. We thank you for bringing us together tonight. Thank you for this year. Thank you because this year is a blessed year. And everyone on this call, Lord of heaven, through wisdom, we prevail this year. The Bible says, "Oh God of heaven, my people perish for lack of knowledge." Tonight we've come to receive that knowledge through which, Lord, each of us were equipped in order to handle the year as good as it can be. I'm grateful to you for this opportunity tonight, and no one on this call will ever miss the point. Lord, grant us understanding, grant us wisdom to assimilate the things being spoken. Let the right questions be asked and let the right responses be received. Well, thank you because in our midst tonight, we know you are here. And I know, Lord, that you will take control of all that will happen tonight. We hand, oh God of heaven, our sister Matria into your hands, and we ask that through her and through wisdom, Lord, that you'll navigate this session to the glory of your name. Blessed be your name for answers to prayers. In Jesus' name. Amen. 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 All right. If you're on this call, just can you unmute just to make sure that we're all here? Unmute, say hello, hello if you're here. Just unmute for 1 second.
Hello, everyone. Happy New Year.
Hello.
Happy
Hello.
New Year.
Hello.
Hello,
Happy
happy
New Year.
New Year.
Yeah, I still not heard some voices.
Hello.
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 Hi. Hi. Welcome tonight. Welcome tonight. Welcome tonight, beautiful people. All right. So let me hand over to she just came out of traffic and she looks so beautiful. I was tempted to ask her which traffic so I can get into it. So I'm heading over now to Matriya and I will spotlight her and she will take it from here. Please go ahead.
All right. Good evening, Pastor Fresh, and good evening, everyone. Like I said, my name is Motunrayo Oyelakin. I'm not new to the house. I'm actually a member of the house. So this is not a strange place for me to be. And I'm very, very glad to be here. So quick introduction before we go into the subject of tax. My name is Motunrayo Oyelakin. I can say that I'm a tax professional. This year, 2026, will make it 20 years of doing tax. That's all I've done all my work life. So 2 decades of tax experience. Started my career with PwC where I trained before moving to work for organizations, and I've worked for multinationals. I currently work for a Nigerian company as a tax manager. So tax is all I've done. That's my bread and butter, if you can say that. So I would, that's about all for introduction. I'll share the presentation and then start. This is going to be a conversation more than just presentation because this is a very hot topic at the moment. And let me start by saying there is nothing carnal about tax. It's very spiritual. God expects us to pay our taxes. So let me share my presentation now. And then we'll take it from there. Okay, can you please confirm? You can see my screen. Maybe Pastor Freddy, if you can confirm it's up, so we can go ahead.
Absolutely, you can see that clear.
All right, all right.
Yes.
Yeah. So like I said, this will be more of conversations. I have just a few slides that will take us about 10-15 minutes. Then we go into the discussions, which will be the Q&A. So as I'm going through the slides, if anything comes to mind, you can just start putting the questions in the chat room. That's where the real session will be after this after the slides. So a few interesting quotes about tax. These are very archaic, very old. It's been from the 18th, 17th, 16th century for some of them. In this world, nothing can be said to be certain except death and taxes. So it is a constant in life. The second one, the hardest thing in the world to understand is the income tax. So you are in good company. Tax is generally a complex topic when it comes to calculations, computation, understanding the law. So this is an interesting part of accounting of the finance world because it combines both accounting and law, because you're going to be interpreting the tax laws and then it happens to affect your naira or your dollar as it may be. So it is not unusual for you to feel, oh, this is actually a complex thing. It's normal. That's why there are tax experts all over the world. Then the third one is very interesting and very relevant. It says the difference between death and taxes is death doesn't get worse every time Congress meets. So see this way, we've heard in recent times, oh, tax reform is going on. And then the legislatures, the lawmakers are talking about taxes. So this is every time Congress meets, every time you hear anything tax reform, it gets worse in terms of it becomes more complicated. People have many questions to ask. So what is happening in Nigeria now is not strange. It happens all over the world. I put just two pictures there. One was when the president signed this new tax policy into law, the four laws that we have now. This was in June of 2025, so less than a year ago. But of course, this effective date of the new laws is January 1st, 2026. And this is an interesting publication in this day. This was just yesterday's paper. And it says NRS, which is the Nigeria Revenue Service, targets 40.71 trillion revenue for 2026. This is like 44% increase from where we were as a country in 2025. And what this simply means is that the taxman or taxman is going to be more aggressive this time around with regards to tax collection. So it is no longer business as usual. So let's go into the main thing. So the presentation, just the outline of the presentation. I'll take us through an overview of what the new laws are. Then I'll go to the implications for individuals, whether you're an employee, you're a business owner, you're a professional, and then I'll touch briefly on implications for companies or large corporations. I think more relevant to us are business owners, young professionals, SMEs, and then employees. Then the interesting topic around your bank account, and I thought it would be good to actually take that on. I know a lot of questions will come from there, so I just prepared a slide to tackle that, and then we'll go into the Q&A. So as an overview, the Nigerian Revenue Service based on the new laws, replaced what we knew as FIRS, the Federal Inland Revenue Service, is now called the Nigerian Revenue Service, which is the broad umbrella tax revenue administrator for the country. And then the enforcement powers of the Nigerian Revenue Service, the new laws have given them more power. And then there is also unified tax administration technology as a result of that. The state tax authorities who collect taxes for each state, they are still very functional, they remain the same, but there is now like more unification with NRS coordinating through what is called the Joint Revenue Board. It used to be called Joint Tax Board. It's always been there. And it's important to know that the things that we are seeing based on the new tax policy, they are not things that just came out. They are not new. For those of us that have been in the tax world, people have been paying taxes, corporations have been paying taxes, the laws have been there. What has happened is just a reform, basically, to collate all the many, we have a lot of different tax laws, and then consolidate them into one big body of laws, and for ease of administration. So a lot of things were changed in that. Then secondly, one of the major impacts from the policy or the intent, which has it is yielding the results, is that lower income earners now benefit from a lot of exemptions and reliefs, while higher income earners, you know, they've seen increase in their taxes. So you tax the people that are earning more and protect the people that are earning less. Then same thing with small and owner-managed businesses, more tax relief, simplified reporting. There is also the digital and VAT compliance requirements heightened now for mainly for large taxpayers. Everything is going automated. The taxman wants to see what you are doing in your business almost real time or near real time or even real time. Those are the new introductions. Then large companies face stricter effective tax rates and consolidated levies. So more taxes for bigger companies. And when it comes to effective tax rates, there is like now a strict minimum for companies to say 15% effective tax rate is the minimum we want to see from any organization. So even if legitimately your effective tax rate, which is your tax that you have made over profits, is less than 15%, the taxman will say you pay me extra so that you make it up to 15%, basically increasing the tax obligations of companies. So let's go to the nitty-gritty now. For individuals that are under employment, what the new tax law has done, it is just an amendment of what was there before. It is not a new introduction. We've always had what is called the graduated tax rate system, which is under the payee regime, which is what employers deduct from their employees on a monthly basis and remit to the tax authorities. But what the new tax laws are introduced is amendment of the bands for the income or taxable income. And then the result of that is anyone that is earning less than 800,000 per annum, you actually don't pay any tax. Tax rate is 0. So they've amended the tax rates so that more lower income earners pay less tax. And then if you're in the higher band, you pay higher. Now I have a whole slide on what this calculation is, and I'll go through that because I know that is important to a number of us. So it not only applies to where you are in employment and then they are deducting tax from your income. It also applies to if you are running your own business as an individual, you make profits, you take your profits through these tax computations and then you pay your tax. So I'll take us through the details on how that is computed. But one of the other implications for individual employees, there is now a mandatory unified tax identification number, which each one needs to go and register and get. That is easy, it's online. I think the kind of information that is needed will include name, your NIN, I believe, and then you just can generate it by yourself. So you have your tax identification number. Also, it's defined what taxable income is. So salaries, bonuses, it's always been this, but it's just expanded it to include, you know, more recent types of streams of income, digital earnings, and all that are now clearly captured and stated in the tax laws. Now, for developed countries, these are already there, but because our own tax laws are really archaic, some laws haven't been amended since the 50s, 60s, or 80s. So So this new law is just like basically updating and putting everything that needs to go in there. So all that is now clearly defined. Every form of income you earn is liable to tax. Only a few exemptions, and I'll go through that as we go on. And also for, people in the diaspora that going and come out, there is clear tax residency rule. You spend time in Nigeria, 183 days and above in a year, you are liable to tax in Nigeria. You're tax resident in Nigeria. Or even if you don't spend up to the 183 days, which is like 6 months in a year in Nigeria, but you demonstrate strong ties, like you have a permanent home in Nigeria, this is where your family economic interest is in, you are a tax resident in Nigeria, even if you spend more time outside of the country than here. There is withholding tax and payee compliance. The last thing there, it's what I just described earlier. Your payee is pay as you earn, which is the personal income tax that employers deduct from employees' income and remit to the tax authorities. So that continues. It's always been there. It continues. It's just that there is more awareness for a lot of employers that are not aware that from your employees, you're supposed to withhold their tax and pay to the government, not those individuals paying by themselves. So if you have people in your employment, you're responsible for collecting that tax on behalf of the government, and then you remit it to the government. And there is what is required from everyone, every individual, is at the beginning of every year. So for employers, by the 31st of January, which a lot of employers must have complied with, some states granted exemption here and there, but at the beginning of the year, so by January 31st, the employer files the annual tax returns for the company, which gives all the information about all the taxes deducted from salaries in the previous year. So for this January 2026, your tax returns will include information on all taxes, all the pay taxes you deducted from your employees throughout 2025. So the monthly schedule of the payroll, including the taxes that you have deducted and remitted, you file it with the tax authorities. Now, apart from that, individuals are then expected to file their own annual returns by 31st of March, which, that is still about a month and a half to go now. So each individual is supposed to go online and file their tax returns. If you're in Lagos State, I believe most of us are here in Lagos State, it's pretty straightforward. Most other states have also developed, their online platforms for filing tax returns. You go on there, you have your payer ID, your email address or phone number. If you have not registered, you can easily register. And then it's just tick off, the forms. You put in all your income for the year. If you're in employment, you put in the income you earned from your employment, the tax that has been deducted from you. If you don't have any other form of income, just click submit and that's it. It's pretty straightforward for those that only earn employment income. But where it gets a bit more complicated is where you have other sources of income. You're supposed to declare everything, whether it's rental income, any profits from businesses that you run, you add them up together, including your employment income, and file your taxes. And if the only taxes that you have paid is that which the employer deducted from you, then you pay the additional tax on the other income that you're just declaring. So by March 31st, everybody's expected to. There are penalties for not complying with these things. I will get to that. Before now, no, but this is not a new law, by the way. It's been there from time immemorial. But now I think the enforcement is going to be very strong, much stronger than ever before, because of all the awareness and the sensitization the government has done. You are liable to penalties. You'll be charged. If you don't pay, then there are other ways they can enforce collection of that. So I'll get to that when we get to that slide. But this is generally what impacts individual employees. Okay, so this is the tax table I was talking about. This is what the new tax law prescribes, or this is what it stipulates for tax computation. So these numbers are per annum. So if in a year you earn 800,000 or less, your tax rate is 0. Now, the fact that you're not paying tax does not mean that you won't have to file for those that the employer will still file, basically saying the income is this amount, so it's 0. And then the next 2.2 million is taxed at 15%, the next 9 million, 18%, next 13 million, 21%, next 25, 23%, then everything above 50 million per annum is taxed at 25%. So for example, your salary is 3 million per annum, which is the first two lines there. 800,000 out of that is not taxable. The remaining 2.2 million you tax at 15%. So it goes on and on like that. But I'll show I'll show us how to do that calculation, or a simplified way of doing that. So when we say tax, when we say taxable income, it is your salary or your business profits less every form of relief that you can claim. Now, for your business profit as an individual or a business owner, a business name, or you're in partnership, that you would have to file your individual tax return. Your business profit is your revenue less all the costs. So it is actually the profit that is being taxed, not your revenue. So you take out all the costs. If you're selling goods, for example, you've bought them from somewhere, you're selling at markup, you take off the cost that you used to purchase. So it's really the profit margin on it. And also all the attendant costs, not just the cost of buying the goods. You have, maybe you're paying rent in the location we use, you have salaries to staff, you buy diesel, all those things that you do, maintenance, whatever you do, you take out all those costs, and whatever is left, which is the profit to the business, is what you bring to this tax table to compute your taxes on. Now, when we say tax reliefs for those in employment and even other individuals, you have things like voluntary pension contribution. So if you make contribution to your pension fund, to your pension account, your retirement savings account, that is a relief. So you deduct it from your salary before you compute your tax. So things like NHF contribution, private health, mortgage loan interest. For mortgage loan interest, it is the house that you're living in. So it's called owner-occupied residential property, and it is claimable only once in a lifetime. So once you claim it on one property, you can't buy another property tomorrow and say you want to claim your mortgage loan interest. So things like life assurance, and the newly introduced rent relief. This rent relief simply says 20% of your annual rent. So if your rent is 2 million per annum, 20% of that 2 million is 400,000. That 400,000 is, you claim it as a relief, or 500,000, whichever is less. So if your rent is 10 million and 20% of that 10 million is 2 million, you can't claim the whole 2 million. You can only claim 500,000. That is the threshold. Now, how do you claim all these reliefs? Before we go into the administrative things you need to do, what it means is, if at the end of the day your salary or your business profit is say 10 million, for example, then all this, maybe you did pension contribution of 1 million, you did NHF contribution of 20,000, private, put together all your tax reliefs, all those things, rent relief, put it together, let's assume is 2 million. You take that 2 million out of 10 million. So what you have left as taxable income is 8 million. It is the 8 million then you would have to put through the tax table. So that's how reliefs work. So it's not like you calculate your tax, then you remove the relief. It's not a credit, it is a relief. So you deduct it from your income, whatever is left, like a net income. That's what you then put through the tax table. So that is how to calculate your payee tax. For business owners, the way you compute your tax as an individual business owner is the same thing for employees. The only difference is you do it on your own. The employer does for the employees and then do that. But depending on how you set up your business, which this is actually informative for those that are running their own business. The way the tax laws have brought new opportunities, like an opportunity really for small business owners. So if your turnover is 100 million or less in a year per annum, and your fixed assets is less than 250 million, you are classified as a small business, and then you are exempt from corporate income tax. So it is actually to encourage small businesses to basically formalize their business rather than using a business name or doing it on your own. Go and set it up properly under CSE. It's even easy to do your CSE registration online by yourself. Make it a limited liability company. If you are within this range, your turnover is less than 100 million in a year, your fixed assets are less than 250 million, you would not pay tax on the profit of that business. That is corporate income tax. So rather than doing it as an individual, then you pay your personal income tax on it. And you saw all those rates that I showed you earlier. So if your income as a business, for example, is 60 million, that is above 50 million. If you do an average of all the rates on the right, you may be ending up about 21, 22% effectively as the tax on the profit of the business. That is, but if you are here and whatever your profit is, so long as your turnover is less than 100 million and your fixed asset is less than 250 million, no tax on the profit of that business. It does not mean that you are exempt from other taxes. Like if you have employees, for example, you still have the responsibility to withhold their payee and remit, but that is not tax on the profit of the business. So those are the new incentives that have been put there in the new tax laws for businesses to basically formalize their business so that they can be brought into the proper tax net. The fact that you're not paying CIT does not mean that there are no other obligations for you, but at least you get the tax exemption, which is very good. You can imagine retaining 22% of your profits instead of paying it off, but that's if you're within this threshold. VAT remains 7.5%. There is opportunity if you are doing a business, you buy and sell, whatever you buy, the VAT you have paid on what you've bought. When you sell and charge VAT on it, you will remove the VAT you have paid when you were buying those things. That is called input VAT. Then VAT you are charging on what you're selling is the output VAT. You will take it out. So you basically recover the VAT that you have incurred. And it is mandatory for businesses to register for VAT. Now, small businesses under this category also, they are exempt from, registering or charging VAT. If your business is small, under 100 million turnover per annum, you don't have that obligation. You can opt to do it voluntarily to say, oh, you want to, be charging VAT, yeah, but you're not mandated to. So that is for large businesses to register and then charge VAT. So those are some of the confusions that have come with the new tax laws. So you see somebody selling something on the road now is charging you VAT. They don't even have the obligation. They don't have the right to do that. Most of them are not registered for VAT. They are not going to remit that money to the government. People are just taking advantage of the new tax law. Development levy for companies, really, this is for incorporated companies, limited liability companies. There's something that was called education tax. There were different type of things. IT levy for big businesses, big companies, they would know that. Now all that were just combined into 4% levy on your accessible profit. So that is really for companies. Now, for large companies, I think I already touched on this. The key changes that we have there are capital gains tax, that is number 2, it increased from 10% to 30%. Capital gain tax is tax on profits you make from selling assets or any item that is liable to capital gains tax. So shares, properties, fixed assets, if you sell and make profit on the sale, that profit is what is liable. So if you sell shares, if you bought your shares at 10 million, you are now selling them 2 years later and the value has increased to 13 million, you sell at 13 million. Now, the difference between your 13 million and the 10 million you bought it, that is your gain, which is the 3 million. The 3 million before 2026 was liable to 10% tax. Now it is 30% tax. So that's a major change for big companies. I also mentioned number 3 earlier when I was speaking about effective tax rate. So like a minimum tax rate for companies, the tax rate for corporates is 30%. The company's income tax rate is 30%. However, this is effective tax rates because there are costs, there are things that you would have deducted from your revenue or your profit before you compute tax. So it is possible at the end of the day that even though the statutory tax rate, which is the 30% of your taxable profit, is 30%. However, your effective tax rate may be lower than that because of different things. Maybe you have some assets, deferred tax assets, or you have losses, you have items that are not taxable. So overall, at the end of the year, even though a company is declaring a profit of 100 million, their tax at the end of the year may be 5 million. That's 5%. And it is legitimate. It's not like you're trying to, there are allowable reasons why that can happen. But what the new tax law has said is no matter what, there are some safeguards, there are some things that you can put in that calculation, but overall what they're trying to say is whatever the case is, your effective tax rate should not be less than 15%. So if it is less, then you'll be asked to pay the additional to make it up to 15%. This is actually in compliance with what happens globally. So Nigeria is just trying to take their share, because if you don't do that and you go to another country, they will take that extra tax. So Nigeria is trying to take what belongs to us, basically. The fourth one for large corporation is what is called electronic invoicing. Is new. So it's like a digital filing system or digital reporting system, such that when businesses are doing transactions with either business or individual, as they send you invoices, it is now digital mandatorily, and that digital invoicing goes through like an FIRS or NRS, the new tax authority, their system, such that you're sending an invoice to your vendor or to your customer. That invoice must go through the FIRS NRS system, and they capture it. So they have almost real-time information on all your transactions, and they know whether VAT is liable, whether there is withholding tax. It's just really information collation, so that the monthly requirement for filing and the annual requirement for filing for corporations, the FIRS already have data, so you can't just come and, put anything in your tax returns. They already know the actual transactions that you've carried out during the year. And there are penalties for not complying with all these things in the tax law. So let me deal with this issue of access to bank accounts. Let me just clarify it before we go into Q&A. Now, for the new tax policy does not just automatically grant everyone, grant tax authority right to freeze or access your bank account. No, that is not what the law has said. However, there is a provision in the new tax law that gives the tax authorities what is called the power of substitution. So this is in a case where you have failed to pay your taxes, you have been assessed, you have been audited, you've been given notices, and the tax liability or tax debt has been established on you, and then you refuse to pay within the time that you're supposed to pay. Now, the tax authority can now rely on that part of the law that gives that power of substitution. So they can mandate third parties like your banks, your employer, it can be debtor, people that are owing you money, it can be your landlord, it can be your tenant, whoever is supposed to give you money or whoever you hold money with. They can then rely on that thing and mandate them to remit the established tax liability or tax debt from your account or from whatever they are owing you to the tax authorities directly. This is where the issue of access to bank account comes in. It is an enforcement mechanism. It is not at the beginning of the conversation on whether you're owing or not. It is actually like a last resort for the tax authorities. And the only tax authority that has come out, publicly with this is Lagos State. They've issued a public notice to say that they have the rights and that they are going to, use their right of substitution if need be. If you are compliant with your tax payments, your tax filing, if you have any letters from tax authorities, you respond, you attend any meeting you're asked to, or you have conversation ongoing, nobody is going to access your tax account. You establish a liability. Even when you establish a liability, you can go to the tax authorities and not negotiate, but appeal, for maybe installment payment, how you want to pay it. If you have an agreement in place, nobody is going to touch your account. However, they have the right to, if need be. So that is what that is. It is not just any money that flows into your account. The tax authorities will go and no, it is not. Tax is only payable on profit, not on bank balances, not on your revenue. Tax debt or tax liability would have to be established before anybody can rely on that power of substitution and call for it. I think this is the last slide, because I believe that we need more of conversation than the presentation slide. But I'll share one more thing before we go into Q&A. If you are part of the Hills business community, I think this is your lucky day, because what we have done is to have a payee tax calculator. There are a lot of things out there online that you would see, oh, this is how to calculate your taxes. This is an easy Excel tool, which I've created for Hills Business, where all you need to do is input. There is even an instruction, they edit only the green cells. If you see what is on your left is the annual, if you want to make your annual calculation. If it is monthly on your right, you can just input what your income or your business profit. Like I said, profit is after you've deducted all your expenses. This is what is going to be charged to tax. You impute that here, and then you can put all the reliefs that you are entitled to. If you have rent relief, you have voluntary pension contribution, private health insurance, mortgage. If you impute all the numbers here, this is a 12 million naira salary, for example. And then your taxable pay, which is your taxable income, is your gross salary minus all the reliefs that you're claiming. In this case is zero because I haven't put anything there, meaning that your 12 million is taxable. For a 12 million income per annum, this is the tax that is payable on it. It's 1.9 million, and effectively that is 16.25%. So if I give an example to say, for example, you've made pension contribution of 2 million in the year, meaning that your taxable pay is 10 million, your tax reduces to 1.59 and your effective tax rate reduces to 13.25. If I give an example of annual salary of 1 million, and say you have tax relief, maybe rent relief of 200,000 in the year. Sorry, 200,000. And I make this 0, no other relief. So you earn 1 million, this is per annum. And then your rent relief is 200, which is, like I said, 20% of your rent. Say your rent is 1 million in this instance, meaning that your taxable pay, 1 million minus 200,000 is 800. Remember, your first 800 is liable to 0. So your tax here is 0 because you earn 800,000 per annum. So like that, you can use it easily to do either your monthly or annual. Say someone that earns 70,000 naira per month, for example, 70,000 you're paying to your staff. You can use this for your employees if you're a small business owner to calculate their taxes. You see that the taxable pay is 70,000 naira. Your tax payable is 500 naira because you're close to that threshold of 800 per annum. 800 per annum is like 67,000 naira, which is liable to 0. So in this case, it's only the difference between 70,000 and 60-something thousand that is liable to tax, and that tax is 500. So the tax calculator is hard-coded. You won't be able to edit it. Only the green cells where you can put in your income and your reliefs. So if you're a member of the Hills business community, I'm sure they would share this with you, or you can reach out to the organizers to share this with you. Okay, that's enough of only me talking. Let's go to the chat room. Or should we say, if anybody has a questions, Pastor Fred, how does this go? Do you want people to ask questions and then we'll instantly go into the chat room? Or Martha?
Thank you so much. Thank you so much. That is a really good start, really good information. Thank you, Matraya. Really, really good. I think we can combine both, right? So, because there have been questions when you started talking. So if you scroll up, we can just answer maybe a few questions, let's say 2 questions or 3, then go to take someone talk and then come back again and take, so that we mix them up. I think that will work.
Okay. All right. I've seen the question. Martha said minimum wage is I believe that's the first thing, 80,000 per month. But the 800,000, yeah, I think someone already answered, is 800,000 per annum. So if you earn 80,000, a portion of your income is still liable to tax. So per annum, that would be 960,000, meaning 160,000 per annum is liable to tax. Is there relief for car insurance? So for a business, if you are a business and registered as a business, so your business, if this car is for the business and you pay car insurance for the business, it's part of business expenses, so that can be deducted as an expense for the business before you arrive at your profits that will be liable to tax. But for an individual, like an employee, you pay car insurance, that is for your pocket. It is not deductible. Do you pay taxes on gifts? No, there is no tax on gift. If you receive a gift, it's a gift, no tax. In payee case, do we upload supporting documents for ourselves, or do we go to HR? Very, very interesting question. So in payee case, if you want to claim any of the reliefs, you will submit the supporting documents through your HR. They will then make that application to the tax authority on your behalf. And when they get the approval from tax authorities, they will apply the reliefs in their through payroll for you. I hope that answers that. Is capital gains tax on share sales for individual also 30% like a very good question. For a company, it is 30%. For an individual, it is your own tax rate. So that gain, you would add it to whatever your profit or income for the year that is taxable is, and whatever your tax rate is based on your income level, because it's graduated, so you lump it together with all the other things that are taxable, and whatever that rate is, it can be 22, it can be 21, depending on the income level of the individual. So for capital gain tax, 30% for companies, and then your tax rate for individuals, whatever your tax rate falls to be, or average tax rate is. What sort of tax does one pay from rental income? Is that land use charge? No, Fane. So land use charge is a different thing. That's a levy that the government levies. Now, for your rental income, it is the same personal income tax pay as you earn that it goes through. But like I said, this is an income. You have opportunity to claim expenses against it. So the rental income doesn't necessarily all fall into the tax table. So for example, I have a house and I'm renting it out for a particular amount per annum. Remember that house itself is an asset that I will be depreciating on an annual basis. So I'll take the depreciation. If I'm paying mortgage interest on that property that I'm getting the income from, I will deduct it. If I'm paying, if I've made any form of repairs on the house, maintenance on the house, I'll deduct all that from that rental income and arrive at a profit number, which is not chargeable to tax. So let me go through two more. I know a number of hands are up. Let me just go through two more. If individuals have been paying tax in Lagos and have been using a tax number, how does the new unified? So your tax number still continues. You get the unified. We don't know yet how they are going to merge the two, but it's important because I understand very soon banks will start coming after everyone through KYC to provide their tax identification number, and it may be this unified number. So you can get it and hold it, but your tax ID with the state that you are in is still valid. I've seen cases recently where Lagos State's Internal Revenue Service has asked for both, for some individuals that are filing their tax returns. So just have it handy. What's the law on tax for those who earn foreign currency if you've been taxed from source? So, Fane, I don't know how, so this can be explained in different ways. So if you earn a foreign currency because of work that you have done in Nigeria, and you're earning that foreign currency in Nigeria, you still be taxed on the income. If you are earning foreign currency, you are tax resident in Nigeria, you're earning income from another country, they've taxed it in that country. There are double tax treaties between Nigeria and a lot of countries. What that means is that tax that you compute your tax as though you haven't paid any tax on it. And then whatever tax has been deducted from it, you would take it out of what if the tax in Nigeria is higher than what you have paid abroad, then you pay the difference. But this is not something that you can just take off on the surface value. So you need to look at the actual transactions thing. Because there are different dimensions to Forex income. So I think I'll stop here. We'll continue with the questions from the chat box, but let's take the questions. So I'll take Ed first. You can unmute and speak.
All right. Good evening.
Good evening.
All right. So I have two questions, but I'll start with this first. So from this new tax law as entered 2025, the law basically states that your business has to align with CBN exchange rates, regardless of how much you source dollars. So for someone who imports now, for instance, I buy goods from China and I got dollars for about 1,700 naira. But then CBN exchange rate is about 1,200 or 1,300. According to the law, that difference is an undeductible expense. Is there any way to go around this? Because it seems like it's it doesn't really make sense, really. So is there a way to go around this, really?
Okay. Okay. So let me take that first before your second question. You are very right regarding what the law has said, that you have to align with the CBN rate. If you cannot, what they've seen, the thought process is that the exchange rate, the black market rate and CBN rate are basically closing, the gaps are closing, so it's close to same. That is not reality, but also they don't want to leave that room for people to use that as an opportunity to claim maybe higher expenses. As of now, there is nothing you can do about it. That difference is not tax deductible. It is just a business loss that you have to take. Not a business loss, but it's just an undeductible expense. It's just part of the expense of the business. So there is no way around it. That's the answer. Except something. Okay, so like the laws have been signed. However, there are implementation guidelines that normally follow laws like this. In Nigeria, they've been working on it. The Tax Reform Committee, they've been working on it. They have not, been published yet. So some of these things will be clarified, and people are still, opportuned and, giving their feedback, and the working committee are still looking at opportunities to even amend this new tax law. Is going to happen very soon. So those are the conversations that are happening now, and we're hoping that when the regulations or guidelines come out, some of these things will be clarified and addressed. But as of now, based on the law, there is nothing that can be done about it.
So basically, that's just going to increase your taxable income.
Yeah.
All right.
Yeah.
Thank you very much.
All right.
So my second question is, so per the new tax law, it says any business making less than like 50 million annually in
100.
revenue. Per the new
100
tax law,
million. 100 million. Yeah.
100 million.
Yes.
Yeah, so I wanted to ask on that because there's a lot of confusion around that. So the copy that I do have that I've read says 50 million. Again. And then Mr. Taiwo, anytime he goes on an interview, he says 100 million. Again. So it's obviously the one that's in the law that I'm going to like reference. You get. Yeah, so going on with the question. So it says 50 million, any business making 50 million and below is exempt from taxation. You understand? So would you advise someone that has a small retail business now to like open an LLC or just have like a regular business name? Considering I think the regular business name is like a sole proprietorship, so you still be tax PIT, right?
Yes.
Yeah. So would you prefer someone doing a small retail business to stick to a business name or open an LLC?
So I said it during my presentation. If your business earns less than 100 million, the signed law, the actual signed law is 100 million, and it will be clarified. If it is less than 100 million, I would advise you to open your limited liability company, because you will then not pay any tax on the profit of the business. That's zero. You're comparing 0 to 20 something percent as a business name or as a sole proprietor. But you would also need to look at your business plan and your projections if you know that you are going to cross that threshold in the very near future. Because what it means is if you cross 100 million, then you are liable to 30% tax on the profits. But if you cross 100 million, even if you like be earning 1 billion, but you're a sole proprietor or you're an individual business owner on that business name, it is still your personal income tax rate of 20% each. So it depends on what your business projections. What I would advise is you might be earning less than 100 million today, but what does that look like in 2 years' time? right? So you can do what works for you, or you get to that point, you say you want to deregister from, being a limited liability company, and then you want to, which is also allowed. So it's just look at what works for you as a company. But of course, if you're within that bandwidth, just go to a limited liability company straight up.
All
Yeah.
right, thank you very much.
You're welcome. Queen ID.
Yes, good evening. Let me start by saying thank you very much. It's been really enlightening. So I have 3 questions. My first question is, for personal income tax, are we filing monthly or annually?
So for personal income tax, you file annually if you are not under the payee regime. That is, you're not an
Okay.
employee
Okay,
paying monthly. So you file annual.
annually.
Yes. File it
Okay.
annually.
Now, my second question, I've been paying tax in Port Harcourt because I started in River State. I started my career there, but I haven't lived there in like many years. So I sit in some committees that have then asked me for Lagos State tax registration number. So how do I handle, because I'm earning income from some companies that are here in Lagos and they want a tax ID. Can I have both?
So you started your career in River State, and that's why you have a River State ID. But where do you live now?
I live in Lagos State.
So you are tax resident in Nigeria, you're tax resident where you live, the state you reside at the beginning of the year.
Oh,
So if from January this year you live in Lagos, you're tax resident in Lagos. So you should actually register for your tax ID on the LIRS portal, get your ID, and that's what you need to be using going forward, because the state you reside in or you pay your tax in is where you get your tax clearance certificate from, And if you're in
okay.
Lagos, you have some things that they'll ask for your Lagos State tax ID. So it's better you do. So you register and then start using that.
Okay. So I'll just forfeit the existing one and then get a
Yeah.
new one. Okay.
Yes.
My last question now, I earn multiple streams of income and they're not regular. But I think you've sort of answered it. If I'm doing it annually, then means that I will get to a period where I then just collate everything.
Yeah, absolutely. All you need to do actually is just keep the records
This
all
network,
through
is
the
it
year.
me? Can you
No, I
guys
can.
hear me?
Yes, I can hear you clearly. Can you hear me?
Okay, the network went off for a bit.
Okay, but I heard you clearly. So you just
Okay.
collate everything all through the year. Just keep the records, then you file at the end of the year or the beginning of the following year.
Okay.
Yes.
So I can go onto the portal by myself because I'm yet to do for 2025.
Oh, yes. You can go on the portal, get your tax ID, file your returns before March 31st.
Okay. Can that be done for companies as well?
So
The
it
companies
depends
file
on.
monthly.
So for a company, you're saying the company is the company a limited liability company? Or a
Yes.
business name? Okay. So for the company, you will register with Lagos State for the purpose of payee for your employees. Yeah. So you will get a corporate tax ID with Lagos State. They will give you a corporate tax ID. Then on a monthly basis, you file your returns.
That corporate tax ID, is it different from the existing TIN that we have?
Is different from the thing is, for a limited liability company, you pay your tax to the federal FIRS, old FIRS, now NRS. But you still need the state tax ID for all the states where you operate, just for the purpose of payee and maybe withholding tax for individuals.
Oh, right. Okay.
Yes.
Thank you so much. Thank you.
You're welcome. Okay, in the absence of any other hand for now, okay, Kelechi, please, before we go back to the chat. Kelechi, you can go
Hi,
ahead.
thank you again for the presentation. Just going from the last question that was asked. So the company has a TIN, and yes, the company also registers in the state in which it's operating, correct? So are you now obligated to file twice at the federal level and at the state level? How does that work?
Okay, so you file at the federal level for your corporate income tax. That is tax on the income of the business or on the profit of the business. That is where you file and pay your taxes to NRS as a company. Now, for all the states, all you are filing and paying is the payee tax for your employees. So you don't pay payee tax to the federal, to NRS. It is to state authorities. So for every state where your employees are resident or where the business operates. So I work for a company that have employees in River State, Lagos State. You have to register in all the states you operate. You will file tax returns, payee tax returns for the individuals that your employees that are in those states. So for the federal, only your corporate company income tax is what you need to file with federal, not payee for employees.
Okay, thank you. That's clear.
You're welcome. Fane, please.
Hi, Morayo. Thank you for the presentation.
Thank you.
My question is, if you have one company and you already have a TIN number or a TI number, and you open another company, you have to get a TI number again.
Yep.
Now, in my opinion, I think that's a bit cumbersome. I do know that the reason why holding companies, right, exist is so that they have it, those that have a lot of companies or services that they provide underneath, they're paying lower tax. But for someone who has a small business, is it possible to, I know it's a silly question, but merge it somehow so that you're not paying tax for different companies all over the place?
Okay,
Thank you.
Yeah, you're welcome. Very good question. And that's what happens in more developed climes. Unfortunately, in Nigeria, there is no such thing as group taxation. Each legal entity pays tax on their own. So if you have a group of companies, if you have 50, 70 companies, as long as each of them is a separate legal entity, you would register. For each one of them, you get TIN for each entity. Each entity will pay and file their tax returns separately. That is the current Nigerian law. So there is no group taxation in most developed countries. You have group tax. If you have 100 companies sitting in the UK, for example, you can file one return for the group. What you can do is to structure your business in such a way that you still have one umbrella legal entity for them, but you have segments, in like different lines of business in the same organization. So it is the same company name you will use, but you can prepare your books in such a way that you can report each segment just for your internal reporting. But when it comes to external for tax or financial statements, everything will be combined together. That is the only way out. Otherwise, as you're opening companies, you are opening different legal entities that each have their tax obligations to fulfill, and that can be cumbersome. Galaxy S22 Ultra. Can you please say your name?
Okay. Hi, Mariah. My name is Nigel.
Pastor Nigel. Good evening, sir.
Good evening.
Yes.
One I asked in the chat, but I want to add on it. What I asked was about the minimum assessed rate to pay. It says is minimum 15%, you say, right?
Yeah.
For a company, that is. Now, a situation where the company makes losses.
No tax.
They are not.
Yeah, no tax.
Someone was paying for last year and they assessed the person as having a minimum charge, but there was a loss. And so they had, before late fine, they had put a charge there. Apart from that charge, the minimum took effect, and you are liable to pay every day. For every day you haven't paid that one. So and then they now changed with the law kicked in. This was in December. The law kicked in. Something that was 170K turned to 1.7.
Yeah.
And
So
they are now, it's daily, it's increasing.
yeah. So let me explain the minimum effective tax rate. If you are making, so the minimum effective tax rate is your tax divided by your profit. If you do not have a profit, you don't have any minimum tax. What you are required to do is to file your returns, which if you do not file, then you're liable to penalties and it counts daily. You are right. But there is no base tax on your profit. So whatever they are charging you is the penalty for late filing of returns. and then there
Okay.
is daily rate on that. So it's possible, but when you have such huge liabilities, personal, you can appeal against the penalty, excessive penalty and interest.
That's what the person has done. But what should seem like a law to encourage small people or small businesses? If you don't understand, you can enter trouble big time, and it kind of defeats the aim, which is to encourage people to. So I think one of the things, and in your practitioners, your feedback to the NRS should be the awareness needs to be more quality. The quality of the awareness needs to be much more, not just putting things in papers. They need to be able to go to groups or gatherings of people and let them understand it, because many people don't understand. You don't understand that you need documentation, because documentation will put you in trouble.
Absolutely, absolutely. Feedback well taken, Pastor Nigel, you're right. They try their best with those sessions. I think more organized sectors benefit more than, those that are not organized, because they have a lot of these awareness sessions, but a lot more needs to be done. I agree with you. Take the feedback. Okay, so let me go to questions. Pastor Nigel, is that good? Okay, sir. Okay, let me do pensioners pay tax? No, you're earning only your pension. You're earning from your pension savings. No tax on pension. How do freelancers pay their tax? This is what we have explained. There is no more, ignorance is no longer an excuse. You keep your records, keep your books, keep your whatever income you have earned throughout the year, keep records. That you will register for your tax. You will self-assess based on all these materials that are out there. You know what the tax rates are. Get a tax calculator, get a tax consultant, compute what your tax is, file your returns and pay your tax. It's easy. If you're in Lagos State, you go on the portal website, declare your income, and then generate a bill. There's a remitter bill. You get the invoice. You can make your payments directly, use your card or do a transfer, and then you get your receipts almost real time. So Faye says she wants to cross 100 million. Don't be afraid of tax. Please cross. If you're sure you're crossing 100 million soon, remain a business name. Yeah, so that your tax is lower. Chioma says, does the account you receive payment in matter for filing, e.g. if you receive payment for a business or service in your personal account? No, it doesn't matter, but you're encouraged to separate your personal account from your business account, not because the tax authorities would mix the two together and take your money. No, it's even for your own good, for the business to be able to determine what the inflow, outflow, your income, your expenses is easy for you to compute. Wherever you put the money does not matter, so long as you be able to account for it. So if you mix it up with business account, personal account, you need to be able to prove. It's just to avoid the unnecessary drama of, okay, because the burden of proof is on you. The tax authority will say your income is 300 million. Then you have the burden of proof to say, no, this is not, 300 million. It is this amount. This is money that came as a gift. It's not for the business. You just need to be able to, explain everything in your account. So it's better, for you, for your business to just, put it separately. So it's easy for you to do your account and make sure you have documentation, like Pastor Nigel said, very, very important. Support documents. You are issuing invoices, you are buying something, get the receipt, file it somewhere. Thank God for technology. Scan it, keep it somewhere. Just make sure you have backup for every single line of expense that you have. What of NGOs? NGOs, they have a specialized tax regime. It is not everything that flows. You get like what do they call, donations into NGOs to do charity work. So charity is not taxable in itself, but if you go to any form of business that is profit making as an NGO, it does not matter that you're an NGO. You earn income, you earn interest on deposits that are in your account. That interest, it is not donation, it is actually a profit, so that is taxable. So NGOs for charitable inflow and work, not taxable, but for anything outside that, you will still be taxed. Let me see. Sorry. if I work with an NGO, will the payee tax be deducted? Yes. So the NGO does not pay tax on their inflows, which are donations, but when they pay salaries to employees, they are required to deduct with payee on the salaries. So it is not the NGO that is being taxed now, it is the individual employees being taxed. Please, can someone send the link to the portal? Are you talking about the LIRS portal? Yes, so I'll share that with Martha. She would send earnings from cryptocurrency. Martha, we are taking it. We're still trying to catch the tax that we can see the real money, but we'll get there. Just be mindful. Anything that is income is taxable. But how to administer that, I don't think we're there yet. An annuity plan operates like pension. Will NRS treat this as tax exempt like pensions? So all your life assurance insurance plans are tax exempt if you make contribution towards that. Fane, if you relocate, I know countries that their personal income tax is 58% effectively. Some 50, most 40, 45. Nigeria, we are still learning work, about 20% average. Are there penalties for not collecting withholding tax and VAT? Yes, if you have reached the threshold for collecting VAT on behalf of the government, you're mandated to do that. If you do not collect VAT and withholding tax, you that you're supposed to be an agent of the government, you will be charged. And the penalties are very steep, I promise you. So it's better to comply. Isaac says, I'm an employee currently paying my tax with LIRS, but I have other sources of income, though they don't come regularly. How do you manage this? So this is easy, Isaac. At the end of the year or the beginning of another year, like now we're approaching that time, by March 31st, you go on the portal and you will put your employment income and the tax that has been deducted, and then every other source. In fact, they've listed it on the portal. It's very, very robust. Different line items, so whether it's rental income, do you have this profit, that profit? If it is others, you put that there. Even if it doesn't come regularly, you collate everything you have earned from other sources in the year together and then put that line there. If you have expenses you want to claim against those, like I mentioned around that rent income, you can put it there. Then the net, you would compute your tax on it. Yes, the compliance burden is actually a lot. So I agree, Kelechi. Is there an app that helps with documenting income expense as well as tax calculation? I've done the simplified tax calculator that Hills Business will share. There are so many apps that can do income expense for you. If you go online, there are a lot of tools out there, free tools that you can use to just be documenting and recording your income and your expense. Let me see. Okay, Shuaibu Ibrahim says, if a small business voluntarily approaches the tax authority after years of non-filing and the bank statements show minimal income, what is the correct procedural step to significantly reduce or waive accumulated penalties, reassessment, penalty waiver request, or negotiated settlement? This is a tricky one. You're a small business. What? Okay, we're in church. I just want to ask why you are approaching the tax authorities. Please just start. This is an opportunity for, fresh start for everyone. Just start filing your taxes from now going forward. For whatever reason, if the tax authorities come to say they want to look into your books for prior, which they have the right to, audits, they can look as far back as 6 years ago. And then if there are taxes that you have to pay, they can, ask you to pay. You can appeal, you can, request for waiver at that point. But if you're owing tax, you're owing tax. But I don't know why you're approaching the tax authority for your past year. Okay, somebody Ed put a link there for a tool that helps to record business expense. There are so many, even apps on your phone, you see, for QuickBooks, things like that. I think I've gone through all the questions successfully and I'm still alive. I don't know if any other person has a question. I will share both the presentation slides, the tax calculator tool with Martha. I'll also share the link to LIRS for tax registration and tax filing. Okay, Pastor Nigel again, please go ahead.
Sorry, I just said let me ask because by the time I type, you might be gone. But this is a quick. Pensioners don't pay tax on pension. But if, for instance, I did a training or a consulting and I end, I guess we expected to pay.
Yes, sir. You are right. You pay tax. You don't, no tax on your pension income, but any other kind of income, yeah. If you make profits, you pay tax. Yes.
All right.
There is no age limit for paying tax. Even at 90, if you're making money, you're paying tax. So long as it's not pension. Okay. I think that is it. Pastor Fred, Martha, I can hand over to you.
Thank you so much. Thank you. At least I was waiting for someone to say, how do we avoid paying tax? So thank God. That was not one of the questions. So thank you so much. That was so beautifully done, and also responses were just very clear. I don't know if any other person has a question or something they would want to clarify.
So as Pastor Fred, I just saw it. Someone just dropped a comment that if you work for a company that has deducted tax on your salary and they didn't pay it for you, go and report to LIRS or the tax authority. It's as simple as that. Because that tax that was deducted from your salary is supposed to flow into records with the tax authorities that issue you your tax clearance certificates. You would need it for so many different things in the future, and there will be no evidence that you have been paying taxes. So you should report that. It's criminal. Somebody wants to avoid paying taxes. I'm not on this call.
Unless you just had to.
I'm not on this call. If as an sorry, Pastor Fred, 2 more questions here. If as an employee you do not pay rent, how do you enjoy rent relief? Okay, I think you answered yourself. You don't pay rent, you're not enjoying the relief. If you're paying rent, you enjoy the relief. You're not paying rent because the document they are going to ask for for you to claim that rent relief of a maximum of 500,000 a year, your kidney, you will submit it. Your landlord's details, your rental agreement, evidence that you paid the money, and it must be in your name. So you can't, even if you cook the books, you want to be creative, they will go and look for the landlord detail that you have put there. If it does not exist, that's a problem. So you don't enjoy the relief. The whole idea is you have graduated to a landlord, so you don't need that. What does WHT is? Withholding tax. I didn't want to complicate things by bringing that concept in here. Withholding tax is a generally complex tax area. I'll just try to simplify it. You do business with any company, right? As a company, they invoice you for whatever it is that they've either supplied you, they've done a service for you, they invoice you. They invoice you today 100,000 naira. You are not, by law, you're not supposed to pay them the full 100,000 naira. Now you deduct a percentage. Averagely now, there are different percentages for different types of services, but most general services is 2.5%. So you deduct 2.5% from that 100,000 and pay the balance to the person that has done the service. Now that 2.5% that you have withheld, that's why it's called withholding tax. You will remit it to the government, to the tax authorities, where that person or the business is registered. If it is a limited liability company you're doing business with, you remit it to FIRS or NRS now. If the business is a business name or sole proprietorship registered in Lagos State, you will remit to the state authority where the person is tax resident. If the person is resident in Edo State, that is where you will remit it to. You are remitting it to the government on behalf of that business. So it is not your money, it is their money, but you are remitting a part of it to the tax authorities in their name. They are the beneficiary. The tax authorities will hold that with all the information of the transaction that happened. That money is sitting there waiting for that company as a tax credit. When at the end of the year or the period, the accounting period, they do their own tax filing as a company, and at the end of the year, their tax is, say, 1 million naira. But different businesses or companies that they've done business with, they've been withholding their money everywhere. They've withheld almost 200,000. You would deduct that 200,000 as a credit, and then pay only the balance as your tax, 800,000. So withholding tax is an advance payment of tax for that person that you are doing business with. But the government requires everyone to be their agent. Help me collect 2.5% first, so that I know that this person is doing business and making money. At the end of the year, when he's filing his returns, this amount is like an advance payment of their tax. They only balance the rest. So, but for you, you are required to deduct. It is not your tax. If you don't deduct, you will be penalized for not deducting on behalf of the government. So it's quite complex. In other climes, you don't see that in country. They only do that with cross-border transactions. If you are doing business with somebody in another country, you collect because the person doesn't have, presence in your country. You may not be able to collect tax. But unfortunately, in Nigeria, locally, it is applicable. I think that is the simplest way I can explain withholding tax concepts. Sorry. Excel says, as a landlord, can you pay rent to yourself? If the property is owned by an LLC owned by you and use it as a kind of relief. So you will provide the details. So look at it this way. It's possible, but why do you want to go through the stress? So I own a company, or LLC, Limited Liability Company, Motunrayo Limited. The company owns the property. The company now rents it out, leases it to me. And in my own personal income tax, I claim it as tax relief. But I claim 20% of it as tax relief. But I'm paying that rent to the company. That rent itself forms taxable income in the company at 30%. So you're just moving it around, but the tax will be collected in any way. So it really doesn't, you have to look at all the things that are required, and it may not be efficient for you to do that. At the end of the day, you may even be spending more. Is withholding tax charged on the entire revenue or marginally? So it depends. Love F, this is a very good question. Withholding tax, it depends on the type of transaction. For most transactions, it may be charged on the entire revenue. So for most services, it will be charged on everything, professional service. But in some instances, if you are doing a transaction where you are maybe supplying manpower, contract workers to an organization, the salaries of those people are the things you bill for, but you put their salaries and then put a markup, which is your own management fee on it, and then you invoice them totally. It's only that management fee, which is your own income. That is what withholding tax will be deducted on, not on the salaries. In some cases, reimbursements as well. If you incur cost on behalf of maybe a customer, you source for, maybe the contract means you have to source for a particular thing, maybe from abroad or wherever, on their behalf. Not that you are selling the thing, you are sourcing for on their behalf. So there's a third party element to it. You submit that third party receipt or invoice to them, and then you charge something for the work you have done to get that for them. It is that extra that is your income, and that is what we're liable to withholding tax. But withholding tax is such a complex thing. You would not even imagine the nitty-gritties of things that can go wrong in whether you're doing it right or wrong. Things that you think, for example, are impossible, the taxman will say, no, this is your cost, this is your income. Everything is liable to withholding tax. So it's very, you need to be careful when you're dealing with withholding tax. Pastor Fred, should I go on? I don't know if you want to shut down. I saw another question.
It's okay, go ahead. We have another 8 minutes.
Okay, 8 minutes, I'll try. So Umeade Obed says, what are the most effective and legal ways to minimize tax liability when financing a business through debt? So your debt, if you're financing a business through debt, that already is a legal effective way to manage taxes, because the interest on the debt, the loan interest that you pay is tax deductible. So that's already a relief for a business. So if you're financing with bank loan, for example, the interest you're paying on the bank loan is a deductible expense in your business, which you should claim. So that's the only relief you get doing that. Yeah. as a teacher, aside from my monthly salary from employer, if I do private lesson, I'm being paid. Will I say yes? No. On your side hustle, Mrs. Dina, you will pay tax. That's my sister, by the way. You will pay tax on your side hustle. But the good thing is you can also claim expenses. So you have private lessons to students. I know you drive to those places, you spend money on fuel. So all those things, your fuel expenses, whatever it is that you buy, the materials you use, it can be IT materials, it can be internet, legitimate, you put it there. As the expenses to claim against that income. But yes, every source of income is taxable. If an individual owns different businesses in different parts of the country, does the individual need to have multiple tax numbers in each of those states, or just on tax number to control just one tax number to go? So Wills, you're trying to say you work, but where are you tax resident as a business? Because you can do business anywhere within the country, but I'm based in Lagos. So you file and pay your tax in Lagos. If you have a taxable presence in different states, maybe you have proper establishments in those states, in each state you would register for tax and pay tax there. But if you're resident, your business is resident in Lagos, but you have transactions across the country, then you'll pay your tax in Nigeria. But if you have business presence in those states, then you'll pay in each state. Oh, okay. Shoaibu, hey, Shoaibu, please don't be doing this. He said he didn't approach the tax office to declare past liability. He went to understand what the new tax laws require for a small business, and they are asking for your bank statement from I wish I knew you before now. Sorry. Unfortunately, you've already presented everything to them. There is nothing. Okay, so they're not asking that at least 1 million after initially asking for 100 million. So long as that money is going into the tax, the state tax account, not to an individual, then you're just, your question is, what's the proper legal process to handle the kind of retrial? Yes, so it is legal. There is the law. The law gives the tax authorities the right to assess you for as far back as 6 years in what is called a tax audit. In fact, if they feel that there is a fraud or willful default, they can go as far back as 20 years. So if everything that they've computed is saying that you should pay 1 million and it will be cleared, you get your tax clearance from that, you have to pay. There is no way out of there. I wish you didn't go to them. That's the only thing I'll say. Are you expected to comply with pay for people who work with you on one-off basis, not employment? No. So that's like agency or just one-off contracts. If you are a registered business, then on that, all you need to deduct is withholding tax, pay the person contract amount and withholding tax, even for contract. So that's like a contractor. Just treat them like that. Is there a document that guides withholding tax for different services? Yes, there is a published NRS document that shows the different services and the tax rate loveth. So I'll add it to the number of things I'll push through Martha. I'll send that across as well. Yeah. Okay, I think that's all, Pastor Fred. I've gone through all the questions.
Wonderful. Thank you so much. Honestly, you sound like a professor in this tax matter. And so clear. I'm really glad that, the responses were very clear. I don't think anybody will be in doubt of the responses they've received this evening. And this is also being recorded. I'm sure we'll have that as well for those who want to go back and listen later. You will be able to do that. And then the document she talked about, we'll share that on the Hills Business Hub group when we are done, when we receive those. I'm trying to thank you so much. Thank you so much. I think this is quite very, very informative. And for everyone who has been here, no matter where you are, either a business or an individual, you would have gained something very, very important. God bless you massively. And to everyone here, thank you for staying on the call. I know so many people came in, and I think for some of them, once their question was answered, they felt they needed to leave. So I know there was a time we came to 80 something or so people, and then other people kept coming and all of that. So, but it's really good that at least everyone have good understanding of how this works. And we are required to pay taxes, and we should pay taxes. I know it's more difficult because of the country we live in and the way things are. You know, when a legislature is buying a car that costs 500 million, and then you're wondering, is that where my money is going to? At the end of it, we will be paid taxes because that's what we're required to do. And as we keep voting by God's grace, things will keep getting better. Elections are coming, and I hope everyone here is going to vote. Please make sure you do, and because these are how we actually ensure that the right people get into power. And no matter what's going on, we just have to keep pushing, keep praying, and keep trusting God. By the way, we'll have an announcement. On the 14th of March will be our first business prayer breakfast. So that's really, really amazing. Please mark your calendars on the 14th of March. It will be incredible. This time is a business prayer breakfast. Normally it's just a business breakfast. This time there is going to be a really good time assigned to prayer. So we'll be doing quite a lot of prayers for businesses backing them up this year. And then we'll also have in May, we'll have our business conference, Open for Business conference coming up. And then in August, we have another business breakfast again. A lot is going to happen this year. And then in between that will be different master classes, all of those lined up for the year. This is our first, and I think it's an absolutely beautiful first for the year. So thank you all for connecting, and please keep, keep watching the platform. We'll keep sharing information, as things come into place. All right, thank you so much. Try. Thank you again. Such a beautiful evening and beautiful information. Really, really helpful to everyone connected. All right. If you have any other questions, you feel free, you can send it to us, and we'll be able to share with her, and I'm sure she'll provide responses later. But for this evening, that's it for this evening. Enjoy your evening. Feel free to unmute and say thank you to our professor before she leaves. God bless
Thank
you
you,
too.
Motunrayo.
Thank you.
So much.
Thank you,
Thank
So
you.
Motunrayo.
much.
Thank you,
Thank you,
Motunrayo.
Motunrayo.
Thank you,
Thank you so much,
Motunrayo. Well done.
Motunrayo.
Thank you. You're welcome.
Motunrayo. Thank you so much.
Okay, you're welcome. You're welcome. You're welcome.
Thank you, Motunrayo. Well done.
You're welcome, sister.
Yeah. Thank you, Jesus.